All right. Kick it 1, 2. What it do? Me be you, you be you. Who be me? We be three. Stay chill, do you? Do me. All right. Uh, what's it called? I ran out of monies, and before that, I was doing index fund investing, which means just investing in the overall stock market of all the biggest stocks, evenly distributed, managed by some fund. And I made $14,000 in 2 years on a $20,000 account. I had like the regular ass indices, the Nasdaq, the S&P 500. What the fuck else? And then the leveraged ones, so that just 2 times the volatility. And then I picked one banger stock. So I did Nvidia, Disney, airlines when airlines were recovering, and Nvidia, and I don't know, you could do Tesla or Amazon or Microsoft or Apple, whatever floats your boat. But for now, let's do some research. This is not financial advice. I'm not making no money off this video. It's not insider trading because I have no positions. The only positions I'll probably hold in my life is just the, what do you call it? My own companies. So whoever employs me, I will be paid in stock, and my performance will be tied to the appreciation of that stock symbol of that company. So I will just work for myself and pay myself in my own stock options, which is what entrepreneurs do. But for just some random ass investing for shits and giggles, let's go through my daily process of what that would look like. So, Tookie Bird, blah blah, lion, and vampire. Oh, vampire, lion, Tookie Bird, and that. All right, so there are 2 websites I use. This is FinViz, and then I use TradingView. Got my watch list of my biggest stocks. So what are they? Berkshire Hathaway, Uber, Tesla, Netflix, Meta, Facebook, Google, Microsoft, Apple, Disney, Nvidia, and then my airlines, my bond, Nasdaq, small cap, mid cap. So you got the like the ETF of the biggest stocks, which is the SPY, and then you got the small cap and the mid cap. So all the smaller companies, and if you think all the smaller companies are gonna go big, you can buy that. If you think all the medium sized companies will go big, you can buy that as well. Basically, the first thing I'm gonna do is just look at the overall market. So Nasdaq. Let's go to here, chart. Join this risk-free competition and earn real prizes. No, thank you. Too risky for me. All right, so you gotta zoom out and shit. You gotta put it on logarithmic. Is this logarithmic? Oh, it's regular. Let's make it logarithmic. Logarithmic just means it goes by percentage instead of by fucking amounts. So like this bump right here, it is related, is all nice and relatable. But sometimes you like it in regular amounts as well, just to see the numbers, because these numbers don't make sense. Like 38 is here, and then sometimes you really want to see the real number instead of just percentages for the purpose of graphing. But whatever, we'll do some logarithmic. Ad blocker detected. Whatever, bro. Get out of here. All right. Let's see. This is the Nasdaq. And my time span is 1 week. 1 week. NASDAQ. NASDAQ are the technology stocks, so your AI is in here. And probably around this time, last year, March, was when we had that little AI boom and maybe some political shit happened. And then why did we crash on February? Oh, probably the Iran war in early February. I don't know. Middle East. I don't know. But oil prices. I don't know. We crashed. So what this is saying, let's compare it now with the S&P 500. It's a little bit different. Is this real? Bruh. Same time spans. Bruh. I can only do one chart per tab. I can't compare any because I don't have the upgraded Pro version. Bruh, this is the NASDAQ. It's kind of crazy. And this is the S&P. They both went down April 2025. Is that true? Yeah, they both went down April 2025. But the S&P 500, which is just your regular ass Wall Street stocks, went up pretty jokingly like that. And the NASDAQ went crazy. So this is not really political, because if it was political, then the S&P would also have been a little bit wild. It was a little bit wild, but not too much. So it wasn't really political. Probably more AI shit, probably, and China commerce, probably. But however, in recent times, like this was at almost 7,000. It was at 7,000. And it's now at 66,666. And the NASDAQ was at 100. And now it's at 85. So it went down about 15% since January of this year. The NASDAQ went down 15%. And it even went down 25% in February. And the S&P went down not that much, 7,000. So like I said, this little S&P is a little safer bet. In 2023 January, it was at 4,000, and now it's almost at 7,000. So it still did go up almost 100%. The NASDAQ in 2023 was at 60, and it went up to 80, maybe 100. So you're getting less returns, even if it was at, say, 40 because it crashed. What I'm trying to say is you're getting similar returns with the NASDAQ and the S&P 500. NASDAQ will, in theory, make more money because it's more riskier opportunity technology stocks. But the S&P 500 is more safer shit, more safer shit. And you get your little dividends and shit like that, So if you don't want to fucking be sweating balls 3-4 times a year when shit crashes like this guy, and receive the same end goal, might as well get the S&P 500. But if you really want to go for the opportunity, then you're going to pick something in the NASDAQ. So let's see. What is Uber? Uber is New York Stock Exchange. Tesla is the NASDAQ. Netflix is the NASDAQ. Google is the NASDAQ. Facebook is the NASDAQ. Microsoft is NASDAQ. Apple is NASDAQ. Disney is New York Stock Exchange. Nvidia is NASDAQ. Don't know what the fuck that is. Berkshire Hathaway is. So basically the only ones are like your Uber, your Berkshire Hathaway, and your Disney are all on this little New York Stock Exchange. And your Tesla, Netflix, Google, Facebook, Amazon, Microsoft, Apple are on the NASDAQ. Cool. Another strategy that I use is just buy the biggest ass shit, blue chip stocks, blue chip. So no penny stocks, although it'll be interesting if you could come across some. How would we do that though? Basically, okay, let's go into Finviz. Oh, simple. You go into AI and you go, oh, you lose a little, oh, now this is beautiful. I never used AI for investing before, but let's try it. What are hot trending growth investment industries? Cool, let's see what it says. So AI, all right, that's kind of, but if we look at AI, like this is Nvidia. It was cool. It went from March last year it was at 90, and then it went up to 200, but it hasn't done shit. So AI, at least not for Nvidia, and that's the richest company in the whole world. So the hype died down. Like I said, hype bubbles last for a year, and it went from March, and we are March, last for 1 year. The hype has died down already. What else is a hype sector? Renewable and clean energy. Biotech. So Moderna and shit like that. All right. I'm not really into these vaccines. Renewable energy, solar energy. Maybe energy might be a good area to explore. Energy. That seems to be a hot issue right now. Cybersecurity, like cloud and shit like that. CrowdStrike. Palo Alto Networks. Fintech is always doing its shit, Coinbase, Stripe, PayPal, Visa, MasterCard. Banking and shit like that. Defense. Let's see. Off the top of my head, I'm gonna go with Disney is standing out to me because Disney is doing its stuff. Let's see. Amazon is also standing out to me. Amazon. Thing is, I don't even follow fucking Amazon. I don't even fucking follow Amazon. Well, let's check out energy first. Energy. Energy stocks. So you got Exxon, Chevron, Valero. I like Valero. And Valero gave the most return, 47%. And it's got no dividend. So refiners, Valero, have strong margins. Let me check out Valero. Valero. New York Stock Exchange. Let's add it to the watch list. How do I add it to the watch list? Oh, there we go. Fucking. That's some crazy ass shit, bro. Is this logarithmic? It's logarithmic, bro. That's some crazy ass shit. This is logarithmic too. That's some crazy ass shit. That's some crazy ass shit. That's some crazy ass shit. From 170 to 240. Energy might be the current hype sector. Energy. I definitely like this more than Amazon. They do oil refining. So they don't do the oil drilling, they just do the oil refining. Would I buy it now though? Let me check the history. I mean, it's not a technology stock, so it doesn't go up forever. I mean, it goes up since 2013. It went up from 34. Went up like 500%. 800% it went up. Or let's go to 2016. 2016 went up just around 400% in 10 years. Really crashed. When was this? In 2020. 2020 it crashed, and so in COVID it crashed. It crashed in COVID, and then it crashed again this February. Let me check this out. From 70 to 130. Basically what you're expecting is at some point this is going to kind of level off into a new level. And then it's just going to hover around for a bit, like this shit right here. Hover around for a bit. You know, this shit hover around for a bit. This shit hover around for a bit. This is a fucking long-term investment. This shit hover around for a bit. Because once it goes up like this, then it hovers around for a bit. And then it might fucking go up again. And then damn, what is 2020? This is like this is a long-term investment, bro. And if you're going for a fucking long-term investment, you might as well buy at any point, because you're going for the long term. It doesn't fucking matter. You don't know if it's going to go up or down. Maybe it goes down here, you get a better price. Maybe you buy a bit now, and then if it goes down, you buy a bit more. If it goes up, you hold. You wait till it goes down, you buy a bit more, because eventually it's going to go like up like this, and then fucking go down, and then just chill around for a bit, for 6 months. So you buy, and then you fucking wait till it dips, buy some more. What kind of company are they? Look at this shit. They're always beating earnings. They do pay a 2% dividend. It's annual. Revenue is going down, but why are they doing so well? Revenue's going down, bro. Revenue steadily going down, and net income's going down. But maybe this year it went up. How was the stock in 2024? Yeah, 2024 it was just going shit because it was losing revenue and stuff like that. But it always recovers. It always recovers. Let me check. What's their capitalization? Analyzers saying strong, but I don't trust this shit, bro. But if it's strong buy is still rare. It's usually between buy and neutral always, or sell. Strong buy and strong sell are rare. See, it's like this. Buy. Oh, that's technical. Technicals. All right. Analysts. Yeah, this is like buy, sell, neutral. It's like that. 1 year target is less than 10% of what it's at right now. This is boring, boy. For me, I'm just buying my index funds and whatever company gives me stock options. I don't give a shit about doing my own research, but the last thing you can do is just go first go like this. Valero. It is oil and shit, but who gives a fuck? It's only $70 billion company. So not like $1 trillion company, you know, it gives a 2% dividend. $70 billion company. Whereas what's Exxon? Exxon's a $600 billion company. And Valero is only $70 billion. So the last thing you go to is just go like this. Valero. You go like this. So Diamond Green Diesel. I don't know what the fuck that is, bro. Refining. Low carbon investors, careers, responsibility about. That seems like a pretty friendly company. Financials. You can see the financials. I'm not going to give a fuck about that. My presentations. Oh, cool. It gives you don't got to click a link. It just gives you the whole presentation. Lowest cost producer. Ah, you can read this shit. What's the competitive advantage? What did that say? What does this say? Large-scale SAF project at the DGP Port Arthur plant was completed in the fourth quarter of 2024. So they completed a large-scale project in 2024. So they completed a large-scale project for aviation fuel. So sustainable aviation fuel is SAF. Sustainable. So this is a pretty sustainable oil company. Carbon so they have an ethanol business. Disciplined allocation of capital. That's just an appendix. All right, let's see. Ethanol, sustainable aviation fuel. I don't really look at the fucking financials. I look at more of their mission statement and stuff like that, you know? Because financials can always change. Premier refining portfolio. Size, scale, and global reach. Lowest cost producer while achieving reliable top quartile operations. Investments into efficiency, market expansion, and higher margin capture. I like that statement. That's how do they do that? Reducing costs and improving margin capture. So they got 4 locations. Improving feedstock flexibility, cost, and crude quality. Growing market share into higher netback markets. All right, they seem like they're actually doing shit, you know. So they're actually doing shit. Let's see. Refining, world's premier independent refiner. Renewable diesel, diversifying into higher growth, higher margin, safe aviation fuel. And ethanol. I mean, the stock went up in value because oil prices went up, probably, you know. But if you just fucking like look at historical stock quote, I mean, if you look at historical stock quote it's been going up since 2021. Like okay, look at this shit. So in 2015 it was at like $50. And then they probably had some new management shit like that. 2018 it goes from $50 to $70, right? And then whatever, it zooms up to $120, but it goes back to normal, back to $70. So from 2015 to 2019, you still went from $50 to $80. And then it has a little crash, but this is the same thing that happens to Bitcoin. Once it creates a steady foundation like this for this 3 years and it crashes a bit, if it's a fucking established piece of shit, this is just temporary. This is just a time to get back in. So it did go back down to 50. So you think, oh, I lost everything I made since 2015 because 2021 is right back to where it started, $50. First of all, you take some profits when the price goes up. You always take a little bit of profits. But this just means you invest again because it has a solid foundation. So you invest again. And then in no time it's back together. One of the things I said when Bitcoin fucking collapsed to $6,000 was in 3 months it's going to be back up. You're not going to need to wait another 3 years because we already waited 3 years in the past. In 3 months it's going to go back up. And what happened here? It went from $50 2 years and it's at $100 again. And then this is another foundation and then it went up again. So it'll probably come down, but it has this foundation. So it's not going to probably drop below this foundation again of $120, $130. So we had our first foundation 2014 to 2017, 3 years. Second foundation, another 3 years. Third foundation, another 3 years. And the fourth foundation will be another fucking 3 years. So if you feel like holding some shit for, I don't know, 3, 4, 5 years, might as well buy. And you feel like investing in energy and oil, but it's a green ass shit. It's $66 billion company, not a fucking $600 billion company. You could maybe read more about their. We read their presentation, but what else do they got? Where's their team or whatever? What's their about? Yeah. Yeah, I like these guys. I would add them to my shit. I don't got any money, but I guess I would pick this instead of. I'm bored of the fucking Netflix, Amazon, Google, Microsoft, Facebook, Amazon, Apple. Maybe Apple. I like Apple. So my choices would be Apple, this shit, Disney for the fucks. Disney, Valero, Apple. Where's my shit? Let's go this. Valero, Apple, Disney, and then fucking Nvidia. That'll be my portfolio. Where's that challenge? I want to enter that fucking challenge again. I'm gonna put in my phone. Let's go like this. Let's go fucking splendid stocks. Now mind you, I mainly just invest in index funds. That's a guarantee strategy. But let's go here. Options. Let's go. I'm just lazy as fuck. I'm just gonna write in here. Valero, Disney, Apple. So here I got Valero, Disney, Apple, Nvidia. That's our fucking oil, Disney, Apple, and Nvidia. What else can we add to there? This is just me. This doesn't guarantee you're gonna get the most money from this strategy. This just says if I'm investing for the next 3 years, I'm gonna have the most peace of mind with my own decision, my own research, and my own fucking. But you do your own research. You have how long you're investing for and shit like that. This does not guarantee the most money. Well, because if I look at my watch list, I got Nvidia, Disney, Apple, Microsoft, Google. See, Google might make more money. Google probably will make more money because look at them. They're being very successful. Google will probably make you the most money, but I just don't feel like fucking investing in it. Google will probably make you the most money. Microsoft not so much because they're being bullshitters. Apple will make you good money. That's why I picked it. Not the most, but decent money. Amazon is in a crapper right now, so you might get a discount if they fix their shit. Meta will make you decent money. Netflix, I don't fucking know. They lost their deal with Warner Bro. But, people still like that shit, so look what happened. Tesla, what's going on with them? Yeah, probably make you money. Uber, no thank you. Although Uber, I use it a lot. And you're getting a discount price. And you're getting a really good price. It was at $100, now it's at $77. And if you check out the history, I mean, it's a new company. It came out in 2020. So, it went from 20, 40, back to 20, up to 50. Oh yeah, this is a good company. 77. So let's go with Uber. Uber will be my shortest. So fucking ad. Over. Let me do a quick little editing here. Take this stuff, bold it, put it here, freeze this. Freeze one row. Get this. And here we're gonna put stock date hot price bought date sold price sold. So give me this shit. Hold center. Okay, red. These there you go. Date bought, what does it say? March 18, 2026. Control C, Control V. And date sold probably be sometime in 2029. So here's an example. Don't follow this because I didn't do any fucking research, but this is just a fucking example of what you should do. Price spot, all right. Valero. Uber's at 77.24. So who cares about the decimals? Just put 77. Nvidia is at 183. Apple is at 251. Disney is at 90. Is at 100. And Valero is at Valero at 238. All right, so this is what I fucking do. I got my little color coding. I froze the row, so if I go down, the row stays there. I got my little stocks, date bought, price spot, date sold. Now, whatever. You don't need to put the fucking date in proper format. You don't even need to put the price in proper format. And you don't got to put the exact date for your future planning. Because that's going to get you stuck in the numbers. And it's not a numbers game. It's an emotional, psychological game. So psychology says 238 and you bought it for some reason. You could also put up here reasons. Whatever, I'll make that bold. So here you could type in your reasons. Psychological game, and you're planning it for 3 years and 238, whatever. Disney, Apple, Nvidia, Uber. And if you fucking change your mind and shit like that, it's really difficult because when you change your mind, you're going to be paying more fees. You're going to be selling, buying, and you're paying more. Hopefully in today's day and age, there are no fees. But if you do have some fees, it adds up. So what I recommend instead is buying portions. So don't buy 100%. Buy 20% of your position now. And then see how it goes. In a month, if you like your choice, buy some more. 2 months go by, buy some more. So get into your position. And then as you're holding it, if you make like a, I don't know, 15%, take some profits off. You make 20%, take some profits off. The price then dips, either hold or buy more, until you reach your end date. So, reasons: scale in and out. So scale in and out, so that's how you can be emotional control. And you just hold your shit like that. And then, of course, let's put our indices. That's what the fuck I like, indices. So that's what you can do. Put your indices. That's what I did. That's what the fuck I did. I did my index funds. What the fuck? Yeah, I made $14,000 in 2 years on a $20,000 account because, just a regular index will go up 15%, 20% on a good year. 2 years it'll go up 20%, and then 1 year it'll go down 10%. And then I had a little bit of the volatility, so the leveraged one, which went up twice as much or down twice as much. And then I had one hype stock, which was Nvidia, Disney, I don't know, fucking Tesla, Netflix, Microsoft, Apple, Google. One hype sector and index funds. And basically I took some profits. So like when Nvidia was going up, it went up 20%, I took some profits, 50% took some profits. Eventually it ended up going up 80%, and I took nearly all my profits. But I held some, and the sum I held, it went up from 80%, it went down to 50%. And it didn't fucking move. Like, we just checked the stock now, it's not fucking moving. And basically then I got out of the position. I said, fuck it, I'll invest in something else. Now you could still hold it at 50% because it will have another, remember we said the base? So it created this nice little foundation. And things are going smoothly. It will pump up again. It's just hovering around there for a bit. It will pump up again eventually. So I guess you could hold on to that last plus 50%. Wait till it pumps up again and then take some more profits off. Or I guess because it went down from 80% to 50%, I could add to the position. So now I could add some more if I still want to hold Nvidia. And I am holding it some more, so I could add some more now. And then when it goes up again, up another 20%, 15%, 50%, take my profits off again. When it comes back down, reevaluate. Do I want to keep the position? Add some more to the position. Take some profits off. And that's how you keep your positions over a long term. Take profits up on the way up. Reinvest when a new base is formed. Look at the historical graph. Is it always forming bases and then scaling up? Look at, I guess, the financials, the margins, the revenue, the profit. And look at their fucking, what do you call it? Investor website and their presentations, their mission, their portfolio, their presentations, their guidance, their business strategy, and shit like that. So that was from nothing to complete portfolio in fucking 45 minutes. All right, so kick it word 1, 2, 3, 4. Stay classy, New York, and bye.